Hello everyone, hello clients, it's nice to be here again. Sorry for my disappearance this next couple of weeks actually. Sorry, I was just doing some other stuff here. Well, we are now back. I was feeling very unwell, had to go to the hospital and some stuff happened. But either way, we're here, we're back again, and we are ready for more and more things. What can I say is last we were talking about the gold and everything, but since we had this time period that we did not do any updates, I would just disconsider the gold position, and as well as we close on break even either way, so we'll be fine. We just pass that one and keep going for another one. So today's Friday. It's almost time for me to update the flux and do some other things, do some very various things I do around here as well. One of them is update the flux, which is really important. But I just decided to do the video today actually, because there's this situation where now we're faced, and I think was a good learning opportunity. So that's why I decided to hit record. And what situation that is? We are doing the USD against the Swiss franc, and what's going on here? What are these lines? What you Gabriel telling me about this stuff? Well, it's simple. Remember one video I think we talked about how if we start losing a position, we can always manage that position back to the low point, or the point that you could lose less money if you were to be on an ongoing losing position. And that's exactly the example I was looking for. So this is actually going on right now in a broker. We're having this very actually massive short that we are still on. Actually went all the way down here to -4%. So we're still running this trade, by the way. So we are on the short side still, and now we managed to hedge it a little bit from this point until this point where we closed. And in here it's plus 158%, so it will cut our loss in probably half, or if it goes back to the point of orange, which is here, we can still manage to actually make some money out of it. So as I was saying, is once you open a trade back to the opposite position that you wanted it to go, it's fairly easy when you use hedging to manage your losing, because then you're not hold by a stop loss, or you're not hold by a simple lose or win game. You can always win the game, doesn't matter what you do. So let me talk about what's going on here. So we opened the position here back in I believe, when was this? So it was on the beginning of the last month, so it's 13th of November. And what we did, we thought that would go up, no problem at all. It's just a general speaking. We thought our position would go bullish, and it couldn't quite end that way. What we had was actually one day after that, we had a massive short, and that massive short was of what? Minus 1.14%. So that's okay. By then, it's totally fine. And what we did, we opened a position where we thought, okay, if it goes less than this previous lower in here, we start a hedging position. And that's exactly what we did in 0.888889. And what we did, we just set a position down. We had this as risk. How much we had as risk over here? I quite don't remember really. 1.42%. So okay, 1.42 was our risk then. Our risk that was kept there. So what we did then, we just opened a new trade to the opposite side, which means bearish. and then we gain 1.58% out of that trade. Okay, no problem at all. And now with that, we close that trade. What we're expecting? We're expecting the market to start valuing more the US dollar against the Swiss franc. And how can I tell that? Because lately, if you follow me on Instagram, you can probably have an idea what I'm talking about. Lately, we have seen more people on the US tending to buying more stocks. People are very happy with the deflation that apparently is going on. So I think that will give a little bit of value more to the dollar. That's why I closed the position when I saw on here on the tool that's giving a little bit of curve, and that's was my line of thought. Okay, so now we probably will have a more valuable US dollar, and then now we can use that to our advantage in order to close that position that we had that was on the losing side. And how we do that? We put 2 points, actually put 3. In case something goes bad, we have a hedging restart, which we're gonna restart the hedging. We do another 1 or 2. We can make we can wait for a more valuable US dollar, or actually a less valuable Swiss franc. And that's the 2 main things that's gonna help us on this situation. The devaluation of the Swiss francs and the more valuable dollar. And that's actually going on right now. Thankfully, everything is working just fine. And we have 2 more points, those being the close minimum, which at this point we can say for this particular trade that if you close over here, okay, we're not gonna on the P&L, we're not gonna lose money, and we're not gonna make any money. So we're essentially going to be this trade close and a loss. But since we had a trade in here that made us 1.57%, that should be our 1.5457. There we go. It actually should be a little more down, but since I already have this on the market, on the brokerage tool, this is more for me to visualize where more or less I could take my money out and still not losing money out of it. So this is actually what happened most of the time. We have a situation that we think we have a general study that was going to take us to the more bullish or more bearish side, and we go there, we get it where it should be. Our position can be more valuable in the process. We try to take as little risk as we can while opening a trade, and that's what actually happened over here. We had a massive bullish side when we have a massive sell-off, starting going back again, but it have this little bit of pullback, and then okay, we set out a position here. That's what the market's telling us that's going to do. It's bullish time. No, it wasn't. So how can we manage that losing side? Okay, now we're doing a hedge account if this if the price breaks this lower low, and we start back again. That's exactly what we did, and if we managed to close the position in here, we're not gonna lose any money out of this trade, and we had a lesson learned. That's a good thing. Actually, it's a good thing for me, but I'm aiming higher. That's why I created another point and said that if we close over here, we're gonna have just a tiny bit of profit, or we can still leave the market. If the dollar gets more and more valuable within time, we can leave it there, and we still manage to make 1.07% or 1% for short, or we can still leave it until it starts to grow back to this original trade position. And that's exactly what I'm going to do based on the news that I get, or based on the flux updates and all that kind of thing. That there are really a lot of variables that can change the outcome of the thinking process and the decision making. So that's why it's urging to study and to always be up to date on what's going on with the world, because that way you can have better understanding of the market and how it's going to play out on the charts. And I think that was what I wanted to talk about on this video, and I feel very happy. I feel better now. My health is getting better. Still a little bit of cough though, but that's gonna be all right. Sorry about that. And well, I'll see you guys in the next video.